Hello traders and welcome to another video review. Today is Friday, January 9th, 2026. Let's take a look at the economic calendar for today. Overnight session full of the data releases. Japan household spending up from -3 to 2.9 on a yearly basis, from -3 to 6.2%. CPI data from China and PPI data from China. CPI in line with expectations, 0.8. PPI up from -2.2 to -1.9. German industrial production down from 2% to 0.8%, but still better than the forecast. German trade balance shrinks from 17.2 billion euro to 13.1 billion euro. Unemployment rate in the Switzerland, together with the consumer climate in Switzerland, is scheduled for release at 9 o'clock. Retail sales data in Eurozone are scheduled for release at 11 o'clock. ECB Lane will give a speech at the quarter to 2. But then we have the major event of the day, which is a non-farm payrolls data release. Average hourly earnings, non-farm payrolls, participation rate, unemployment rate. All of this data are scheduled for release at 2:30, together with the building permits and housing starts. Moreover, unemployment change and unemployment rate from Canada is scheduled for release at the same time. Then we have the Michigan 1-year expectations, 5-year expectations, Michigan consumer confidence, consumer sentiment data scheduled for release at 4 o'clock. FOMC member Kashkari will give us a speech at the same time. Then we have Atlanta Fed GDP now 30 minutes later, and at 7 o'clock we got US Barker Hughes oil recount data release. So big day today. We are going to focus on the US dollar. The non-farm payrolls actually are expected to stay on the same level. 64,000 was the previous number, 66,000 is the forecast, right? So increase of 2,000 is nothing, basically is the margin of the statistical error. So in that situation, anything that could surprise markets might be a trigger for a movement. So let's see what the market is doing right now. We switch to the technical part of this review. So euro dollar goes first. What do we have here? For our time frame chart of the euro dollar, it shows us another deterioration. We are far away from the 100 periods moving average when we were rejected. That was on the level of 1.1743. Now we are testing the yesterday's low at 1.1641 as the technical support at 1.1655 had been violated, and now this is the technical resistance. Next target for bears, 1.1618. So that's the next target for the bears, and the situation might get ugly if 1.1544 is violated. Let's take a look at the Fibonacci retracement levels, right? So from the low of this to the recent swing high, let's say like this, we retraced already 50%. Now there's a battle of the 50%. 61% is almost exactly at the technical support. So please keep an eye on the current situation on the euro dollar. We got the bounce from the extremely oversold conditions up to the level of 50. Then we were rejected, and now we come along again where the extremely oversold conditions are. Now if you can take a look here, we got bullish divergence. We got bullish divergence when the momentum is making the price is making new low and the momentum is not making new low. So it looks like euro dollar might be getting ready or positioning itself ahead of the data release for a bounce from the 50 or 61% Fibonacci retracement if the market is technical. So that's the situation on the British pound. Cable situation is a little bit less complicated. However, we need to update our levels. Now those levels here will act as the technical resistance, 1.3501, 1.3490. those are technical resistance. Now we go back below the 4-hour time frame 100 periods moving average, 1.3454, and we are approaching the lows from the last day of the December, 1.3402. And a breakout above this, and a breakout below this level is definitely very bearish. Momentum is already negative at the level of 35 points. Please expect some sort of the downside movement, especially after we broke out of the channel and we broke below the 100 period moving average. US dollar versus the Japanese yen. Finally, something might be going on here ahead of the non-farm payrolls. Price went as high as 157.61, almost hitting the 70 points level on the RSI. Nevertheless, this is still a consolidation. You got a supply zone here, roughly around 157.91, and the big demand zone 154 and 40. So the situation here is a little bit more skewed a little bit more towards the bullish side, because in the background we got very nice uptrend, right? We got very nice uptrend. End of the year, Christmas period, consolidation range. Last day of the month, consolidation range. We are still trading inside of this range, but on a daily time frame chart we are above the 100 periods moving average. So now any breakout higher opens the road towards 160. Let's take a look at another market. Of course, we are going to take a look at the gold market. The gold market on a 4-hour time frame chart. The gold market on the daily is of course in the uptrend. 4-hour time frame chart, we went as high as 4,483, and then we start here. Market is waiting for the data, non-farm payrolls, that might affect this situation. So we got this level here. Intraday technical resistance 4,499. Of course, any data release of non-farm payrolls better than expected might be worse for the gold, worse than expected, better for the gold market. SP 500 on the 4-hour time frame chart is waiting for the data as well. Low volatility here on this market, roughly around the yesterday's technical support. Now it's the resistance, but we are going to change the situation here. We will move this line here around the level of 6,892 as the market awaits the data. So breakout to the upside is bullish. Of course, there is 100 periods moving average here providing technical support, dynamic technical support. There is old trend line here, might be useful sometimes. So right now we are waiting for the data and the Bitcoin. So what is the Bitcoin doing is really very really and very interesting. Let me just add one more level, because it looks like this one might be needed next time. So this one is of course the swing high, the recent swing high. Okay, we are going to remove this line because it's useless. Now we hit the 100 periods moving average, 89,496. We bounced very strongly back above the demand zone. Nevertheless, it's not enough to bounce back into the positive territory, as the local high was 91,632, and the market is trying to move lower again. Nevertheless, it looks like this market might be positioning itself ahead of the data release as well. So if we let's say mark another the last swing, okay, the last swing, how much did we retrace from the last swing? It's way over the 61%, so it's not really a concern for us. If we apply this to the whole swing, you can see that, well, this one, it doesn't make sense too much anymore, because 50 has been violated, but there is no close below the 50, and 61 is a little bit far away. Okay, let's leave this one. Maybe this one will be, wait, because it's yeah, I know now why it's not actually working. Let me just move it here. There you go. Now it is quite good, and this one will go here. Okay, so 50% was here. So yes, so we will trace 50%. Now it makes sense. Okay, we will trace 50%. 61 is at the level of 389. So right now there is a battle for the 50% retracement. Better than expected data might trigger the movement to the upside on the Bitcoin. Otherwise, we are back towards 61% and then even lower on the Bitcoin itself. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.